How to profit from the average daily percentage move as a credit spreads trader. I'm going to walk you through what this chart is, how to read it, and how to profit from it. So let's walk through the specifics here. First off, this chart came from the Financial Samurai website, so if you want to learn more about that, please feel free to go check that out. It's also made available by Charter. But essentially what it's saying is that a stock's daily move will be between -1 and +1%. That's where a bulk of our averages is. Now, how do we take advantage of this, and what does the outside ranges mean? Well, first off, if you're trying to understand this, when we look at the daily price action of the S&P 500, a stock from the open period to the close period, whether it's an up day or down day, should be between -1 and +1%. When it's outside of that range, we are outside our normal trading range, and that means that something dramatic is happening. So how do we take advantage of this? Well, are you trying to make money with credit spreads, or just trying to understand my strategy, or trying to find a strategy that works in any market? Well, I put together a free course called the Ultimate Credit Spread System course. It walks you through how it works, every strategy for every different type of market, how to generate monthly income, the exit rules we use, the minimum credit, trade sizing, and all that. So if you're interested, click the description down below to get free access. Anyways, hope you enjoy the rest of this video. Well, first off, if the day traded and closed within the -1 to +1%, you're in a normal trading day. There's nothing to do, it's normal. However, when you see a stock exceeding normal ranges, exceeding +1% in a single day, or exceeding -1% in a single day, this should trigger you for the opportunity to take some amazing credit spread trades. Why? Well, because let's take a look at this. When the stock is trending up, for instance, here's a prime example. When a stock is trending up, then we get an out of normal range stock like this. So for instance, if I bring up the measuring thing here, this was a 1.5% move on this large green candle. Okay, so we're already seeing the stock is moving higher and higher and higher. So it's already getting to that overextended period. Now we have a move where it's above 1%, which is our daily expected move. So it moves above that. And then what do we see? We start to see this small pullback to reset. So again, what should we expect to do when we see a previous run up and then a candle that breaks our average daily percentage range? Well, simply this. We're going to put on a call credit spread trade. Why? Well, because the market was already starting to get to overextended territory. Then it really pushed past our daily expected ranges, which shows that it's going to need to snap back in some way, typically. And then we can put on a profitable credit spread trade, a call that makes money to the downside for this next dip. And so again, we can see the same things in different ways, especially when we're headed down to the downside. So you can see here we're trading down. Again, if we have our first initial spike down, because red candles seem to go after one another, you should ignore it. But after we've been trending down for a bit and you see large candles, you can then start to use put credit spread trades to take advantage of these markets. Things like this that really start to exceed expected values should really pull your attention in. For instance, this candle right here, 4.7% daily move. That is 4 to almost 5 times the daily average move. This candle should come in. This is not normal. We need a reset, and so learning how to place credit spread trades around it. So again, if we're more on a downtrending spike, and then we have this huge unexpected move, this huge range, then you can put on a put credit spread. If you're going to the upside, a call credit spread. But this is just something that I want you to keep in the back of your mind if you're a credit spreads trader. What is the daily expected move? -1 to +1. Have we exceeded that? Have we exceeded that by a crazy amount? If so, there may be an opportunity to put on a consistent and profitable credit spreads trade. All right, guys, if you enjoyed this video, if you learned something from it, please smash that subscribe button, and I will see you in the next video.